What's going on, y'all? It's your boy Rody, back with another one. So let's talk about it. What is gap insurance? It stands for Guaranteed Asset Protection. Well, Rody, I still don't get it. Well, let me throw some scenarios at you. It's 2025. Let's say you need a brand new car and you say, hey man, I want a Charger. So these dealerships want to get rid of these 2023 Chargers that they still have on their lot because they want those allocations. So you go for a brand new 2023 Charger Scat Pack. They marked it down to $48,000. And let's pretend that that's the out the door price. Okay, so you get in there, you test drive the car, you love it. And then you go back to the finance department. Well, that's when the price kind of changes a little bit because the finance manager is going to offer you some options. One of those options is going to be gap insurance. So let's say you have two sets of people. Person A says yes to the gap insurance and person B says no. Now let's look at person A, shall we? Okay, so the car is $48,000 out the door. And then it says, hey, if anything happens to this car and you have negative equity, you're going to end up owing the bank if you total this car out. Well, person A says, yeah, I don't want to end up doing that. Let's go ahead and throw that gap insurance on the car. Okay, let's look at person B. Person B says, nah, I'm good. I'll take my chances. I really don't want to do any more add-ons, any more fees, et cetera, et cetera. And let's say for the sake of this argument, both people put $0 down. And as soon as you drive a car off the lot, it's going to lose about 10% of its value, taking this $48,000 car down to about, for fun, let's just say about $43,500 to $44,000. Okay, so let's go back to person A. Excited, I'm ecstatic. I just got me a 2023 Charger Scat Pack with 1 mile on the odometer. And so, you know what? I'm feeling myself. I put the car in drive, I'm headed home. Now this weekend we have a car meet coming up. So we go to the car meet and next thing you know, my boys are hyping me up. Oh man, on your way out, do a peel out. I'm excited. I put the car in the most aggressive mode that it'll go. And then I do a peel out. I lose control. I hit somebody else so hard that my airbags deploy. Well, guess what happened? The car's totaled. So I reached out to the insurance. They for sure totaled the car out and they appraised the car, let's say at $41,000. Well, I owe $48,000. Do you see how we have a problem? We are $7,000 upside down. Okay, we call the gap insurance company and they do their assessment. And sure enough, they write you the check for the deficit, or they'll send it either to the insurance company or to the bank. And now you have made the bank whole. And that's all the bank cares about. They just want their money to total out to the sum of $48,000. Now, let's take person B in this situation. Person B opted out of gap insurance, right? So let's say person B is super excited. They couldn't wait till the weekend to show out at the car meet. They're going to show out leaving the dealership. They put the car in the most aggressive mode at the dealership. They peel out, fishtail, lose control, hit the curb, which then they drift into a pole, get side skirted from that pole, and then the airbags deploy. Now, this person runs back into the dealership, says, oh my gosh, I've crashed my car. Oh my God, what do I do? Is it too late for Gap? Oh yeah, it's too late. And it's about to get even scarier for you. They call the insurance. They get the car towed to a body shop. They check the damage out. Of course, it's total. Same scenario. Let's say the insurance offers $41,000. That this person owes $48,000. Now there's a $7,000 deficit and you don't have gap protection, which means this has to come from the buyer's pockets. So this can either go two ways, okay? Let's look at the first situation. This person says, I don't want this on my credit. I'm just gonna have to pay for a car that I don't have, and I'm gonna work a payment plan out with the bank to pay this $7,000 off in the next 24 months so that I don't stain my credit. On the contrary, the other scenario might go like this. Oh my God, I'm not paying $7,000 for a car that I don't have. Are you crazy? I'm not putting any money into this car. I'd rather use that $7,000 to fund my new car. Well, now you got a couple of problems. You better hope they don't come after you and garnish your wages. This is going to hit your credit, most likely. And yeah, it's not going to be good. So, what did we learn? And then person B is like, well, wait a minute. My car is brand new. It only has 1 mile on it. How is it only worth $42,000? And that is what we call depreciation, my friend. Now, I get it. Some of these warranties from the dealership are BS, but Gap Insurance is not a BS warranty. It is a must-have. Now, let's go to scenario C. The only time that I would say you wouldn't need Gap Insurance is if you did something like what I did. I drive a 2014 Lexus IS250 F Sport. The car out the door was about $21,000 because I did have negative equity from a trade that I had, but I did put Gap Insurance on it. So I ended up putting $10,000 down, and then I had two warranties. I had a Gap warranty. No, I'm lying. Take that back. I did not have a Gap warranty. I opted out of that. And but I did get an extended warranty, which I did end up canceling. So my finance was about $8,500. But check this out. My car was worth $16,000. I have $8,000 of positive equity. So even if you take 10% of that 16,000, let's take even 20%, and let's say that's about $3,000, right? Well, my car is still in the positive equity zone. And so at that point, it does not make sense to pay $752,000 for Gap Insurance when I am heavily pushed over into the positive equity zone. So that is the only reason why no Gap makes sense, okay? And another thing, if you have a sidecar and you're not gonna rack up miles on that car to depreciate its value, yes, Gap Insurance may not be worth it because eventually the value would catch up. But if you're the type, if you're buying that Scat Pack or whatever, and it's your only mode of transportation, you are going to rack up miles like crazy, which means you are going to diminish that car's value, which means you need Gap Insurance. If you have a beater car on the side, a little Honda, a Toyota, great. Keep the car in the garage. Put a big down payment down, and it sounds like you wouldn't need Gap Insurance because you're already in the positive equity zone. But if you don't put a down payment down, this is your only mode of transportation, and you use this car to go from A to Z 7 days a week, you need Gap Insurance, aka guaranteed asset protection, because this will protect you from any negative equity that you would owe the bank if you were to total that car out. And let's say the car is worth $30,000 and you owe $45,000 on the car. That means there's a $15,000 bill that needs to be paid. And the insurance is not going to pay it. They're only going to give you what the car is worth, which is $30,000. The bank's going to call you for the other $15,000. They don't care how you come up with it, but you're going to pay it. I hope this helps. That's Gap Insurance. And yeah, I'll catch y'all in the next one.